Yes, Mr. Kejriwal, you were finishing the point around the outlook for order flows as well as execution.
Yeah, Agam. So if you look at our numbers, we have already got orders of 17,300 crores. We also have L1 of more than 5,000. So if you add up them, we are around 23,000. Our stated target for the year has been 25,000 crores of order intake. So I don't see any major issue in achieving those targets. As far as the capex is concerned, I don't think we have seen too much happening on the government capex. Now, hopefully, with the Q2 GDP numbers, etc., we are seeing a lot of statements saying we will push the capex, etc. So I hope the capex will go up. But if you look at our revenues and all that, we are not too much dependent on the actually the capex of the central government. Our major business is T&D, where a major client is Power Grid, and they have their own plans and their own way of raising funding, etc. So I'm not too much worried. I think where the capex could probably help us is in our water business, where we have seen a sort of a slowdown and a little bit of a payment issues, etc. Once the capex comes up, I think that should go up. Otherwise, our dependence on government capex is not that high as it appears.
Mr. Kejriwal, point taken. And even if you consider your top line, we've seen robust growth over the past few years. Naturally, this is because of the fact that you've had a very strong order book, which continues to grow. And because of that, this has resulted in some very strong execution as well from your end, which hasn't been lacking at all. But Mr. Kejriwal, to a certain extent, there are some queries around, one, your operating margins, where, if I'm not mistaken, you aim to put your operating margins in the 7% bracket. So far, it's been around 6%. And also, there's been some questions about the company's inability to pass on higher costs in terms of project and pricing. So if you could shed more light here.
So Agam, we have been around, I'll say between 6 and 6.4% for the last couple of quarters. And we have very clearly said that this year we expect to end up above 7%. So that's one part of it. And we have also said that next year we should be between 9 to 10% of the margins. So I think margins, we are pretty okay now. We are looking at our order book and the margins on our order intake, and also the tender pipelines and the competitive scenario. As far as the issue of passing off cost increases are there, I think that was primarily, I'll say, a factor of COVID. There were many projects which we had looked at when the COVID has started, and then the order pipelines, I'll say, dried down. So we took some projects by the time the metal prices had gone up. Otherwise, typically what happens is the day you take the project, you go and hedge everything, which is what we do now. So I right now don't see any significant impact or inability to pass on our cost increases. So I think we should be quite okay with whatever we are quoting and the margins going forward.
Mr. Kejriwal, I'm assuming that you're comfortable with your current debt levels, of course, notwithstanding the short-term debt that you have raised in order to fund your working capital. But in that, there was also investor interest in whether or not you are seeking to reduce debt even further. Under what circumstances can that come through? Any targets that you have in mind here?
So Agam, I think there's a little bit of a confusion. We did not raise any debt to reduce our working capital. We actually did a small QIP of roughly around 100 million, and we raised around 800 and odd crores, which has been used to repay the debt. Yeah. So clearly, to that extent, our debt will go down. I don't expect the debt to go down further because we are growing at 15%. If you look at the last 3 years, our CAGR has been 15%. This year, again, we're talking about a 15% growth, and with the sort of order book which we have in the tender pipeline, I'm sure we'll grow by another 15% next year. So I don't expect the debt levels to go down, but the interest as a percentage of revenue, which is 3.3 or so odd, I think by next year end, we should probably be around 2% of, revenue. So I think that's the way it will happen. The debt may not go down, but the interest cost as a percentage will definitely go down.
Mr. Kejriwal, that's exactly was my next question, but you have addressed it because it actually comes down to the impact on profitability. And of course, if your interest rates do go down, in that case, if your profitability will also improve. My final question then, in that case, is to do with cash flows as well. Can you give us an idea on how things are faring in FY25 so far, and what sort of cash flow statement can we expect towards the end of this financial year?
So we are very clear that our cash flows will improve as compared to what was there in FY24. A couple of reasons. One is obviously the margins are going up. The turnover is going up. So as a function of that would be a better cash flow. Also, we had some monies in Afghanistan, so we have received a lot of those monies. There were other monies which were, in some of the older projects from ACBs, etc. Those have been coming up. Thirdly, our larger order intake and execution this year is from India, Power Grid, etc., where the payment terms are relatively pretty decent as compared to others. So we do expect that our net working capital, which is somewhere around 122 or 123, will come down to 110 and maybe next year to 100. We do expect a lot of cash to be released from our working capital, and we will definitely have a significant amount of free cash flow at the end of this year.
Fair enough, Mr. Kejriwal. We leave it at that. Thank you so much for joining us and, well, giving us so much more clarity with respect to some of those critical areas as well. We wish you the best for the future. Of course, for now, KEC International continues to, in fact, make a new life high right now as we speak. So at least the markets are very sanguine about the outlook of the company. But on that note, it's a wrap on this edition of KYC. Lots more lined up on the other side. Stay tuned to NDTV Profit.